am Ben Reppond. Welcome to my YouTube broadcast. Today is July 19th, 2023. So we'll begin and go through my analysis of the market, the way I see things, and looking back on this past week. It was a very positive week in general, especially for equities, precious metals, even a little bit for equities, for bonds. And so I'll explain the detail. So this is a dashboard. So it shows in the yellow box, I list the various indexes. I track 6 equity indexes and a bond index. The 4 U.S. equity indexes, the S&P, the NASDAQ, Russell 2000, and the Dow. And then 2 foreign indexes, one for developed markets and one for undeveloped markets. And then the long-term treasury bond. So all of that is listed in the yellow box shows the last week performance, and the pink box shows the last year to date, and then the green dot indicates that it's above its 20, 50, 100, 200-day moving averages, or a red dot shows it's below those averages. You can see that all of the equity indexes, the top 6 rows, all equities, are all above all of their moving averages. I don't recall the last time I saw that. I think I have, but it's rare. Conversely, bonds, the long-term treasury bond, is below all of its moving averages. That's an interesting pattern. So I'll go into some detail on that later. And everything had a positive week. The lowest performer was 2% up, and the best performer, developed markets, was 4% up. So a very positive week. The pink box shows the year-to-date. So we have NASDAQ 100, 42% year-to-date. Huge. It drops way down from there, down to the S&P at 17, developed markets at 12, and then on down from there. And then the bond, long-term government bond, is up only 1% year-to-date. And that is not good news for 60-40 buy and hold portfolios. Okay, now we get to the sectors, and you can see for the week everything was positive with the exception of the telecommunications sector. And on a year-to-date basis, of the 11 sectors, 7 of the 11 were positive, 4 have been negative year-to-date. The 2 primary ones that are positive are the top 2, technology and consumer discretionary, up 41% and 35%. It drops way down from there, and industrials are at 10%, up 10, retail up 7, etc. So it's heavily oriented, the gains are heavily oriented to technology and the NASDAQ 100 and to consumer discretionary. Most of these are above all 4 of their moving averages. Telecommunication is below all 4, and then energy below 2, and consumer staples below 1. So generally speaking, a positive week, and for many of the sectors, positive year-to-date. All 11 sectors are part of the S&P 500. And it might be nice to say, boy, I wish the S&P 500 had these in it and not these, but it never works that way. So over time, these tend to rotate and go in favor and out of favor. The mixture can become quite different from time period to time period. As I said, the S&P 500 for this past week was positive. That's indicated, excuse me, indicated by the little tick up at the upper right corner. You see that move up, that represents last week. And so this is a weekly chart and for an 18-month period of time. So you can see that from October of last year, that gives us about 8 or 9 months. October of last year unto present, generally speaking, the S&P 500 has gone in an upward direction. The S&P 500 is broken into two parts, two broad parts. One is growth kinds of stocks, and the other is value kinds of stocks. Value stocks would be more old economy stocks, and the growth stocks would be more the technology-oriented stocks. Since the beginning of the year, you can see, generally speaking, that black line shows that growth is in favor. Growth is the numerator. It's a relative strength chart. So growth is in favor. When it goes down, value is in favor. So if you looked back for last year, most of last year was down, which favored value. And now most of this year is up, which favors growth. So two very different time periods. And the growth, this ratio is plotted here and is now the growth over value is over its 20-period moving average. When I compare, again, a relative value chart, so I compare the large cap stocks, all large cap stocks, or at least the S&P 500, to the small cap stock index, the Russell 2000, the ETF is IWM, you can see since about March, it has generally moved in an upward direction. But for the last month or so, you can see there is a move down, and that move down favors small cap. But the big move up favored large cap. Government bonds, you remember that dashboard when I showed the first dashboard, the last item on there was the long-term government bond. It was below all of its 20, 50, 100, 200-day moving averages. Well, here you see it plotted on a weekly basis, plotted against the 20-period moving average. And it did have a little move up this last week, but it's generally from about December, generally speaking, has gone sideways and maybe even slightly down. So this is not good news, as I said, for 60-40 portfolios, because last year you can see that huge decline that it had. While equities declined, bonds declined in some cases even more. And then this year, when equities went up, bonds did not participate. So the 60-40 buy and hold portfolios, the growth on those is probably pretty anemic for this year because of this drag on there. And they were clobbered last year because both bonds and equities were correlated in a downward direction. The dollar continues to weaken. So over a 24-month period, you can see the dollar is generally heading in a downward direction. And this is good for those who are buying things in the U.S. from another country or who are investing in the U.S. But when it goes the other way, it doesn't work in our favor when we're spending money abroad. Gold, represented by the ETF GLD, had a very good week. It was up, is now up above its 20-period moving average, and generally speaking, has moved in an upward direction for about 8 months. So good for precious metals. Silver had an even better week last week. Now remember, silver is more volatile than gold. So when it goes down, you can see this chart. When it goes down more sharply. when it goes up, it often goes up more sharply. And that happened this past week, pushing it well above the 20-period moving average. But over that longer period of time, you can see it's generally moving in an upward direction. When I put it on a relative strength basis, this shows the strength of gold versus silver. When it moves down, that favors gold. When it moves up, that favors silver. So this last move up on the far right, you can see that how much more silver is in favor than gold. But there have been periods, like right in the middle of the chart, you can see periods where silver was just out of favor for a few months, and gold, whether it went up or down relative to silver, gold was a better value. Bitcoin had an up and down week, and so from January of this year, it's generally speaking gone up, but this week saw a big move up and then a big move down. So it did not, relative to where it has been, it week to week did not move either direction very much. It looks like it went slightly down a little, but it was a pretty volatile week for Bitcoin. The volatility index is going down, continuing to go down. And so now it's down around 13. So this is well below the area where it's considered higher risk. So as stocks move up, reducing risk and reducing fear and reducing volatility, it causes this to go down. Conversely, when stocks move up, when stocks move down, the volatility index moves up. Asbury Research now has all 6 of their indicators positive. So that matches with the dashboard and the charts. Everything is moving generally in a positive direction. So we had a lot of periods last year where it was not this way, but this is a period to be exposed to the market and to make money, at least for now. There will come a time to protect capital, but this is the time to be invested. Gold and silver. Now I've shown you the ETFs for gold and for silver, so now let's look at the metal itself, the physical gold and silver. And this last week, as you saw in that chart, there was a little tick up, and that showed that gold is at 1961 per ounce for spot, and that's up 1.5% over last week, Friday to Friday. Silver, 24.99, a huge move up, 7.9%, and you saw it in that spike up in the chart. And the gold-silver ratio is 83-1. A monster box of silver bullion is $13,610. That is about $1,000 more than it was last week because the price of silver went up so much. So the markup is still only $2.23 per ounce. There were times within the past year it was $5 an ounce. And the buying of silver is slower during the summer, so it's not unusual to see a lower price for the markup during the summer months, but it wouldn't surprise me to see that number go up sometime beginning in September. The cost per round when bought in a box of 500 is $27.22, and it is a little more expensive, $27.96, when you just buy a tube. These prices are from my son Preston, who's in the precious metal business, and these are his prices, but they're a good benchmark for you. Thank you for watching. If you have questions or comments, leave them in the comment section below. Thank you for watching.